Good morning, everybody. What's up, chat? We're in the house. Look at some of you guys. So quick. In it to win it. Love it. GM. Fifth love. Is it all-time high day yet? Is it? Almost. I don't know. First time? Look at that. Love to see it. Roll the intro. Yup. We did it. Oh, appreciate you guys, Midwest. Yeah, definitely. If you're on X or wherever, retweet it. Let's get some people in the house. We got just coming in on 100 as we just start up. So yeah, appreciate all the love, guys. Look at this already. These guys cannot hold back. I'm already in trades. Good night. Ready for the week, man. Yeah. Ready for the week. This is, we're close, right? We got to be close. I saw it this morning. I was like, little dipski. Ready for a ripski. However you want to say it. We are, oh man. Yeah, we're like pennies away from all-time high. It's bad. It's close enough. Good enough for government work right there. But welcome, everybody. And the Jasonistas. You guys hilarious. All the way from the Middle East. Holy moly. Welcome. Appreciate everybody. If you're new to the channel, welcome for sure. Make sure you subscribe, give the video a like. What we do here every Monday is we kind of just go through what happened last week. What do we have to look forward to this week? What are the main catalysts on deck for the week? Tommy, we can talk a little bit about NFP and how that shaped out and how that might shape the market moving forward, actually. That's probably a pretty good deal or something that you... It's the most important day of the month every month. But now that the government's back open and we're getting some regular data, quite frankly, it's been a little wonky. But yeah, after yesterday, and I think moving forward, Friday, and I think moving forward, we should be good to go. From NC, what's up? Yeah, there is a ton of catalysts this week. Not a joke. But the biggest catalyst is past. That is non-farm payrolls. That was last Friday. and quite frankly, it always sets the trend for the month. It's not about last Friday, but it's about how we trade moving forward, or how the market moves, rather, moving forward. Can we close the week green? Yes, we have some massive catalysts. We have CPI coming. We have PPI, which the market doesn't react too much to. And then we got earnings season coming out. Dude, this guy with the hair comments, they're still gray. Can you watch this later? Absolutely. Everything's recorded. It's live right now, and then we'll actually repost it, I believe, or the crew will repost it later on in the channel. But my Nebius is doing well today, man. No lie. All right, so let's get on with the show. I'm ready if you guys are ready. Well, let's do this. All right, so this is what it looks like. So let me go ahead and hide this. Here's the main headline of the day. Trump credit cap hits banks. Did you guys see this? I saw a comment about SoFi down there. We had MasterCard down, Visa down, Amex down, Capital One down, all of them down. It's just a tweet is what it is. But if you weren't familiar with it, or if you're not aware of what's going on, let me just go ahead and move the slideshow a little bit forward. And this is how we'll do. So the big headlines hit us, what happened last week and things like that. Trump proposes a 1 year 10% cap on credit card interest rates. It's a headline. Does it actually happen? I don't know. this is a hard one. I'm not really sure how I feel about this, because like that's if you're carrying a balance, which I mean, maybe the chat will know. Do you guys carry a lot of balances? I mean, I guess I don't usually carry a balance though. I was taught that you're supposed to use it, but not actually carry a balance. Maybe the chat will know. Do you have never carry a balance? Yeah. I mean, that's the thing. So, but what's the zero balance? Yeah. Okay. I mean, you can hardly ever. Zero debt. Look at this. I mean, what is our chat is like primed unless I forgot to pay. The worst. You think a lot of regular, I mean, if you have to, for sure. But I feel like I was taught to fill it up all the way and then pay it down, or fill it up at whatever and then pay it down. Fill it up, pay it down frequently. But yeah, I mean, I don't know if that's how everybody learned. Anyways, the deal is this. What's an interest rate on credit cards? Everybody's like, wrong demographic here. Hey, you know, we have like the CNBC crowd, pretty educated investors. An average, I think, credit card rate on a balance is like 19 to 24%, something like that. So when you think of it, if Trump wants to do a 10% cap on credit card interest rates, this is the bank's net interest income. He's talking about cutting their interest income in half. So of course the stock's not going to do well. But does that actually happen? And I mean, I don't know. You only paid interest twice on a credit card, and he blamed my mom. That's amazing. 30%? 30% is pretty high. Yeah. I use it like a debit card. Yeah. I mean, that's ideal. Yeah. It shot up to 28% post-COVID. Wow, that's pretty high. So yeah, it used to be 19, 20%. But this is what's going on. So, of course, these banks that issue credit cards and things like that, SoFi included, they're going to have a knee-jerk reaction. If you haven't learned by now, well, here's a learning curve. The market prices in expectations. They do not care about what actually happens. That's not what it's about. That's not how the market moves. So, surprise, this is a knee-jerk reaction. It's probably a buy the dip moment, I would guess, because like, okay, first of all, that's a lot. And second of all, the initial reaction is like, you're going to cut banks' net interest income in half. It's actually not what's going to happen, because just like this chat, I'm reading this chat. I don't know if we just have a very affluent audience or what. But if most people don't actually carry balances anyways, it's not that big of a deal. But also, that's not the only way that these banks make money. These banks make money on their fees and all kinds of other stuff. It's a big chunk of interest income. But yeah, I mean, I think everybody can agree 30% does not make sense with balance transfer offers, as long as you're not carrying like $1 million of debt. Well, I mean, even then, who knows? But you know, I'm not a banker. I'm not an economist. I don't really play one. I am a trader and an investor, but we do look at these things from a fundamental perspective. And what I can tell you is that the market is having a knee-jerk reaction, thinking that the bank's net interest income is going to get cut in half, which would like absolutely decimate a lot of those income streams, but it would be temporary. And honestly, the first initial reaction is just going to be a knee jerk. And so probably a dip buy. I don't know if it goes all the way back here, but we'll see. I think you want to see how that pans out. It depends on your time horizon. If your time horizon is long, you probably want to wait for this to play out and see where things kind of like mellow out on. But other than that sector, the rest of the stocks are up. The rest of the stocks are pretty good. And man, it's oh look, Laura's working. What a G. I love it. But the rest of the stocks are up. Everything looks pretty decent. And that's the one headline that's kind of hitting everything. Also metals. So gold, silver, my copper. I'm in a Freeport trade right now. FCX is the ticker. I took my silver out, or some of the silver out of the safe a week or so ago. I have not gone down to the pond. Okay. I took a little bit out. And I'm thinking about, like, what do I need to do here? Do I let it go? Do I need to run down to the pawn shop right now and sell a bunch? But I didn't do anything yet. It's just sitting there, ready if I need to run down. But dude, this thing, I don't think I need to worry right now so much. So maybe it goes back in the safe. And worst comes to worst, I might hedge it with some digital silver shorts. Who knows? But yeah, I think it's a tie into, there's still some funkiness going on, maybe a little geopolitical risk. Metals still have not only the safe haven trade, but also the data center play. And that's copper, silver, and all that kind of stuff. So man, I mean, it makes sense. Trade deficit shrinks to the lowest level since 2009. Trade deficit, the U.S. trade deficit sinks to its lowest level since 2009. And I thought the tariffs were going to destroy us. I thought the tariffs were going to be the end. That's what they told me, at least, right? But no, not so much. Not so much. At least not yet. I mean, this is still, if you follow us and you watch the last few recordings, this is like we're coming into the soft landing area. So I think we're there. The question is what for the market? The question is what comes next? And because the market's always forward looking, it's like, are we priced in for a perfect soft landing? I think very close to. So the market's going to ask itself, well, what do I have to look forward to now? What have you done for me lately? Right? It's very funky like that. So that's really what we have to look towards. And we do have earnings season. So we know that the last round of earnings was actually really good, but it's got to stay good. It's got to stay good. So we can't see any cracks in the armor there. And right now, we'll pull it up in a little bit. Actually, no, we probably won't. But the market's only pricing in still 2 rate cuts for next year. Is that real? Who knows? We have a new Fed chair coming in. Did he announce who? I guess COPEX. Yeah, COPEX is a copper ETF. Did he announce? No, I don't think he announced yet. But we have a new Fed chair coming in. Did you guys see the hilarious Powell is under criminal investigation over the weekend? I saw that headline. I was like, oh my God, it's like a hilarious soap, like a drama. But yeah, Powell's taking it in stride for sure. But anyways, everything looks good. Defense stocks still flying. Palantir's somehow hanging up there. And non-farm payrolls, which is the big data point that we got for the week last week, that came in on Friday. When you look at non-farm payrolls, so number one, we want to look at things that move the market. We kind of touched on it a little bit, but the market will price in expectations right away. So the expectation right now on a headline like this is that, boom, interest income is gonna fall off a cliff, get cut in half, literally, for the stocks, and the market instantly prices that in, and it's only if the market only moves if that was not expected. And so this headline was not expected, and therefore we see that kind of reaction. So when it comes to non-farm payrolls, what was priced in previously is what's in the parentheses here. That was the expectations coming into the print, and everything came in fairly in line, with the exception of private payrolls, which again, not that big of a deal. Well, it is a big deal, but not that big of a difference. So what I will say is 50,000 jobs taken over the last period. Look, this is still a really low payrolls number. I'm used to seeing things in the 200,000, 150 to 250,000 type of range for new jobs taken. We're kind of in a lull from that perspective. But at the same time, unemployment rate expected to come in at 4.6 comes in at 4.4. So that kind of puts the market to lean on, look, it's fine. We're as expected. We were priced perfectly. It's not a big difference. So we don't see a huge reversion or explosion in either direction. We're pretty much exactly where we've been for the last week or so, kind of toying with these all-time high levels and trying to see if does the market have another reason to take another leg higher. And for right now, non-farm payrolls was at least not a reason to go lower yet, and at least we know it was at expectations. So therefore, it's not actually a reason to go higher yet. But we have earnings to look forward to, and it's going to be about earnings and where the market prices in the next rate cuts, possibly whoever that new Fed chair is. And in between, then we have this unemployment rate, which we get jobs numbers on Thursdays. Jobs are they're weekly, so they come in very regularly. They can sway the market, a little bit here and there, but it's not a trend defining moment, not like this last Friday's non-farm payrolls. So before we go any farther, all I'll say, and I'll just cap this here, is that the way this non-farm payroll stuff works, it is a fundamental event that will create your technical trend for the month moving forward. So after Friday, after we have the market's knee-jerk reaction, everything else after Friday, which means today, tomorrow, and until we have the next non-farm payroll number, what we're looking for is it's very simple. Just put a line straight across on your chart. What was Friday's high? What was Friday's low? If we're trending, and I say trending meaning like multiple closes above or multiple closes below, that's the trend for the month. That's it. Simple, not complicated, very easy. But while we're inside of Friday's range, which, by the way, is exactly where we are right now, we expect to go sideways. So the market's telling me that, hey, look, I need another reason to go forward or to go higher or to go lower. So whichever reason comes first, that's what's going to happen in the meantime. But let's go ahead and move on. I think from a seasonality perspective, just a quick sanity check, where we are in the market, we are here. This is a 4-year presidential cycle. We should have a little more room to the upside. What is that? So this is like February, March, April, May. Here's June. So June, typically we have a little blip on the radar. Does this show up on the screen? I don't think it does. I've been using these drawing tools. Can you guys see the screen? Maybe I'll make it blue. I don't think that my thing captures this. Anyways, it's right here. Oops. This spot. So we usually get a little push. Oh, it did. A little push to the upside in June, but this year it's supposed to be a bit more muted. And then the big dip buy every year is typically in September. But between now and then, we don't really know if we're going to be higher or lower by September. In the meantime, and this is the biggest dip buy that we get, by the way, in a 4-year presidential cycle, this is the dip to buy. Whichever one, if it comes, who knows? But if it shows up, that's going to be the one to grab for sure. I'm up for sure. Nothing's for sure. But in the meantime, we have what's called the January effect that is actually rising a lot of their tides here. A lot of these medium cap, mid cap, and small cap growth stocks too. We're kind of underway. We're starting to push towards those highs. We might have a little bit of a dip, but honestly, this is to be expected. We're right around, might be mid-January. This might need to go forward just a little bit. Who knows? But yeah, this is through March, which is typically the strongest seasonal index for the year. And this is like the one time a year that you do go heavy into the mid caps. And then you could probably trim a little bit. Who knows? For the week, though, this is what we have on deck. Moving forward, we have 10-year note auction, which I think should happen any minute or should have already happened. Tomorrow is our biggest day of the week. So tomorrow we get something called CPI, or Consumer Price Index. If you're not familiar with some of these data points, what CPI is, it's the actual inflation rate in terms of like how much inflation are consumers paying, like Consumer Price Index, like how much did prices go up over the last period? And this is it's actually pretty backwards looking, which is why NFP becomes the most important one. But this is the market's favorite economic data point, meaning this moves the market quite a bit. So although things might look good today, like I said, it wasn't enough on Friday to push us forward. The market's either going to look for a reason to pull back or another reason to go higher. And so if CPI is not super hot, that's probably good. We'll have to see it. We'll look at the numbers. And I don't know if Evan's going to join us, but I'll take a look at the actual economic calendar to see what the expectations are. A lot of this is about if the market needs another rate cut or not. If CPI is too low, you need a Goldilocks one, basically, because if the market's if inflation's too low, I mean, yeah, there's definitely not going to be a hike or not going to be a cut. We're too high. If inflation's too high, there's definitely not going to be a cut. There's no reason to have another cut. But right now, I think we're priced pretty much perfectly. And then PPI is Producer Price Index. That's the following day. And this one, actually, it is a little bit more forward-looking because if you think of it, the Consumer Price Index, and then it's the Producer Price Index, which is what PPI is. And that, when you think of it this way, it's like if I'm buying, let's say, shoes, for lack of a better analogy, Nike, right? It's like how much CPI is how much is Nike charging me, the consumer. PPI is like how much is Nike paying for their product on the manufacturing side. So that's what that number is. And then we also get existing home sales, which this home building situation, talk about a rebound that's like peeking its head over. This could be a pretty powerful move, at least for 2026, if that does come to fruition. That might be a pretty big thematic trade for the year. And then Thursday, basic stuff. We talked about jobless claims. We have import-export data, and then industrial production and the rig count, which really does not move the market at all on Friday. Then moving forward into earnings, look, this is what we're coming off of. So I record the Dow 30 or the top 30 companies in the indices every quarter, and I just kind of take a quick tally. So this is what we're coming off of. Last quarter, 27 beats, 3 misses. I mean, that's as good as it gets from an earnings perspective. You just look at like, did they beat or miss their forecast? That's what this is. The only 3 that did not is like Boeing, Home Depot, McDonald's, which, by the way, Boeing, Home Depot, those could be the turnaround stories. If those beat all of a sudden, it might be a big deal. So we'll have to see. Everything else is, looking really good. And this is the general calendar for the week. So it's all financials this week. So JPMorgan tomorrow morning is now, I believe, the kickoff to earnings season. It used to be, if there was any, oh, look at this, Sam in the house. It used to be like I think it was Alcoa. If anybody's like OG in here, earnings used to be like alphabetical, like AA is the ticker symbol for Alcoa. And that used to be the first one. But now I think it's broadly JPMorgan as we see the kickoff of like the financials. So it's the financials week. And the way the earnings season work is that we go around kind of like round robin. And this might actually be a good setup for the banks, having gotten hit pretty bad. That might be a decent setup now that I think about this, because they're coming right after this. Interesting. We'll see. It might just be like a drop, pop, and then like slowly go sideways again, most likely. But and then Delta, which another turnaround sector so far is this travel and travel and leisure. The cruise lines are going crazy. A new emerging theme could be China, right? Baba up 10%. That's crazy. And 10%. I mean, it was time. It's time. And even at 10%, let me just look at the chart. You guys are killing me right now. Yeah, I don't think it's bad. It might be squeezy, but you still probably have a little bit of room for the week. Anyways, travel and leisure and financials. So we get those starting off this week. Yeah, super interesting. I mean, Delta is going to be interesting. This thing's had a huge comeback also. So we shall see. It's a big week. It's a big week, definitely to start us off. Before I go anywhere else, though, and before we even start looking at charts, we have one friend that usually gives us a quick little forecast, and her name is Miss Cleo. If you don't like this part of the show, don't watch it, whatever. But this is for entertainment purposes only. We actually get a little tarot reading. It makes me laugh every time I talk about it. But it's odd. Like she sometimes just absolutely knocks it out of the park. So we give her some time to see what she's got. And she did send us another reading for the week. But again, entertainment purposes only. But let's see what she had to say for the week. All right. This is Cleo. I'm taking a break from laundry. Well, oh God. See, I didn't look at this. I don't look at these things at all. I'm always getting the all right. So Miss Cleo's not, I think she had this card last week. Oops. But the way this works is that we get I'm zooming all over the place. We get a theme card for the week up here. Yeah. And then for every day of the week, we get a card also. I mean, so that theme card does not look good. Too many swords. I don't know, man. What are these cards? Yeah. So that I remember this one. This is like you feel like you're left out in the cold. Today's the Chariot. I mean, that's what maybe she's talking about the Bears. I don't know. But the daily cards don't look bad at all. Someone says a lot of swords. I don't know. So the Chariot, that's today. Whatever this means, I have no idea. Like, I don't know this stuff. And then tomorrow is the Ace of Swords, CPI day. Then the 1, 2, 5. Okay, so Ace of Swords, 2 of Swords, 5 of Swords. I mean, we're definitely preparing for battle here. And I hope she's saying that we're not going to get left out in the cold in poverty after the week is done. My God. And then this guy looks like a joker, but he's not. But it's like the 2 of Pentacles. So I don't know. But she writes a little write-up. So I'll quickly run through this, see what she had to say. Yeah, this is an interesting pair with crypto. She also does a crypto reading with the crypto theme card. I guess crypto had a 4 of Cups. The 5 of Pentacles represents negative feelings. Okay, maybe just feelings. In this case, there's suffering and despair, a feeling of being left out in the cold. I mean, that doesn't sound good, Miss Cleo. I don't know what you're trying to say. Everybody was having a good Monday. Now you come in here and throw it all off. The good news is that help exists if we look for it. This holds the super bearish energy at bay. Okay, so not so bad. Maybe it's just sideways. It's also important to note that we're moving from 6 to 5 in the same suit. This implies likely reversal from last week's green move. The key is finding out when in the week it will occur. Hey, look, I will say if we hit 700 on the index, that would make sense. Like a clean 700 for people just to be like, poop, sell. Take, like I can see that happening. I mean, which is very possible. Monday, today, the Chariot brings yin and yang together in order to harness their power and use it for fast travel. Is it travel? Are we going in the travel sector? What is she saying? Sometimes that means an active intraday session for day traders, and other times it invokes mean reversion. If we mean revert, we didn't. It will be energy. Well, we did at the open, and then we equal to Friday's session, which means we'll close near Friday's open. If we test and recover, then we'll likely try a rally but close flat. Okay. We tested and we recovered, and we're trying to rally, but she thinks we close flat. Tomorrow usually brings new starts, CPI. Sometimes I think that she like read the economic calendar and then like fiddle through I don't know, right? Bring new starts with a ton of energy, but this one's exception happens when following major arcana, which it's doing here. Continuation is the play, and with a high potential for a trend day. Don't try to force a trade if nothing appears, but if momentum takes over, you can follow it. All right. Basically, I don't know is what I heard. And if we go somewhere, then go ahead and follow it. To Wednesday, ace to two of the same suit. This is interesting. The chariot throws a wrench. The chariot throws a wrench in the gears. Chariot. Oh, Monday. And I can't tell if this is forward or backwards progression. But I can say that this card represents being stuck between two paths because the knowledge we need to make decisions is not available. Well, I can trade this if this is her reading. I know how this is going to play out. If the mean reversion form appears, you can chase the trend. Otherwise, I would stay out. Thursday, 5 of Swords. There's deceit in play for Thursday. Okay. And perhaps some brutality. Price action will be punishing and prone to traps. I don't like trappy price action sucks. Swords like to cut both sides, so it's probably it's probably a better day for day traders than anyone else. I'm good with that. This happens even in the case of a 2 to 5 series like we have here. I would expect a mean reversion day that doesn't give you a chance to get in for a decent trade. Oh, that sounds like a gap in flat. Possible. Friday, 2 of Pentacles. We're back with another 2, which surely suggests a restart this time. Surely, right? I don't know. Might finally get a decent trend day as well. Play mean inversion in the direction of momentum. Okay, so she's saying it comes out by the close of the week. Recap, this week features a lot of chop and disappointment, but there are opportunities to be successful if you're a sniper. Well, Miss Cleo, Fine. Let's hash this out, and I'll go ahead. So what I'm looking at is a 30-minute time chart across all major indices and proxies, but we're going to start on the SPY chart or SPY. And the way that this is going to work, let me see if I can turn this on. We're testing this new NFP one, but I know, oh, he took it off. All right. Well, anyways, the way this is going to work is that last Friday's high, which is going to be up here in white, this line, is the line that we need to get over, basically. So that's what we talked about. It's this box right here. So the moment that the market receives the data and the low, so of the New York session or from like 30 minutes beforehand is when we get the data. But this is our NFP box. So that's Friday. And I'll just do a quick read. It's 295 or 695 spot 30 on SPY to the upside and 689 spot 18 for the low of the day, early Friday morning. So this is the box. This is the box that we need to get out of. And Miss Cleo thinks that we're going to be trappy or choppy. What that usually means, and I could easily see that playing out, is we have like a press forward and then a close below and then something like this and something like that. And we close the week and maybe even we close the week here. Very possible and typical for a digestion phase. So what I will say is that while maybe we're not at the all-time high right now, the market is going to digest Friday's move and data moving forward. And until we are getting multiple days outside of this box closing, 2 to 3 is multiple, then no big deal. And so the way that this works essentially is that we're going to be looking for essentially like an open above and close above. That's going to be one day. And then we have open above, close above 2 days. On the third day, if you have an open above, we're just up and to the right. That's how it is. But until then, let's say you get a day like this where you have an open below. It's not a trend day. And then you have a close below. So we would actually expect this to come back down, and we would expect this to come back up. And quite frankly, trade in this exact box. That seems trappy to me. That's pretty much exactly what she's saying. And even if we have an open above, let's say we have something tomorrow that opens up and goes, but closes like here. If we have an open above, but we close below, that's not good enough to give us a trade. So we're looking for a full trading day outside of one of these ranges. If it's an open above and then close below, that's also not good enough to think that we're going to have a downside move. That's probably going to come back up and at least retest it before making another move to the downside. For now, I'm kind of inclined to throw me some iron condors on here, but that's how the trend for the rest of the month is going to go. If you don't believe me, too bad. But here's the last one right here. This is December. And the way that it works, this day, see how it's down here? This is what I'm talking about. If this was the NFP day right here, market digest that on whatever it was. You have an open above, close below. It's not good enough to think that we're going to go down right away. Then you have an open below, close above. We're going back to the highs. In this situation, you're going back to the highs right there. And then you have one day, 2 day, you're going up. And that's all we did after that moment. And it was this day here that marked your trend. I can go back further in time and say something. I mean, this is one here. You're up, and then this is a CPI, I think, or FOMC, one of those two. But you have one open, super close below. You don't want to press that because you're typically back up. You have an open here, below, close on. You're battling these zones, and it's not until you have, this is 1, 2, this is your third day. So you have 1, 2 days. This day does not count because it's closed below. But this day, here, day 3, fully, and then you're up and to the right. So these days in between, it's choppy, it's trappy. I think that's possibly what she's talking about. Super similar here, did it again. That's another NFP. But this is just giving you guys an idea of how it works. Don't freak out if you see like intraday, it's one way. But once you start trending over that high or that low, whatever it happens to be, that's it. That's the trend. And generally speaking, you can lean on that trend until the next non-farm payroll data point. But this is 98% accurate over the last over the last century. Is not a small number. Anyways, when you guys get a chance. Oh yeah. So if you guys want to do some tickers, go ahead and start dropping them now. And then what I'm going to do is I'm going to finish the indices. And one thing I'll say is if we do lose this, the way that this is going to work, go ahead, drop your tickers now, is that see this last level that I highlighted here? That last level, that December non-farm payroll is 682.20 and 674.98. I have like a double up in here, so that tells me that I'm going to have probably a pretty strong zone in here. But if we trend below 689, the first stop is that 682.20. If we lose one level, we absolutely go to the next level. That's just how it works. And same thing, if we lose this level, then we can go to this level. And then each level as we pass through becomes support and or resistance. But yeah, we could show you this on like a lot of time. But here's one. Here we got a non-farm payroll. You lose one, you go straight to the other. You lose one, boom, you go straight to the other. And then as you pass through them, just kind of how it works. Same thing here. But hopefully that shows you guys how these things work. You get over one, you go straight to the next. It's been so long since we've been in a downtrend, but here's a downtrend. You lose one. Here, you go to the next, to the next, to the next, until you're way down there. The next, which was the lowest. So anyways, that's enough of that. But so that was downside on SPY. Let me just go ahead and get the upside really quick. I mean, upside we know from a measured move perspective is going to be 710s. Let me just get an extension on yesterday's or Friday's. I keep saying yesterday. Friday's range. That would take me to 701 spot 40. Just if I doubled this range and we do trend to the upside, and tripling that range is going to take me to 707, which that is the maximum overall. But I'll just tell you this. Right now, I don't have a reason to take that. What I can say is that the lows, the viable dips are currently, what we have to assume is that Friday was going to be either the high or the low of the month, which means that if we come back to the Friday's lows, well, the question is, was it the high or was it the low of the month? That's the general statement. Right now we're testing the highs, which by default you would think that the lows are in. That's the question. Are the lows in for the rest of the month, or are the highs in for the rest of the month? So we're at the highs, a little bit more cautious. At the lows for right now, since the broader trend is up, I'm actually going to assume that should hold until proven otherwise, because the broader move is telling me, hey, look, I have confluence up to about 710s. And does that, now my question is that within an average week's range? It is. So on average, this is how much SPY moves for any given week. So that's about 15 points over the last, 30 weeks. That's a lot. And this is the downside move. On average, the downside move takes me to 675, which also was one of our levels, oddly enough, right here. So that's where we are. 675. If I see it, if all hell breaks loose, the market hates CPI, which will be the pivot tomorrow, I'm probably looking for 675 as the bigger dip buy opportunity. And I actually really like that, at least in the near term. And we'll have to see how it goes from there. But that's crazy how it works. So that's not just a guess. It's a lot of data behind that. All right, Qs, super similar. Let me see if I can turn this thing on. Of course. Grant me access, right? Anyways, the low end here is 615, but yesterday's low, yes, I did it again. Friday's low. Here's Friday's high. Friday's low, there's our box. Let me just do that real quick. So there's our box. And as long as we're living in the box, honestly, I kind of have to assume that that's where we stay, unless I have a big reason to go. Intraday, I can break out. But here's the thing about this. Because we opened below, you can trade this intraday, but I wouldn't expect this to hold. I would expect to pull back, to come back to 627.88. Wow, that's Qs. And then if I have an open above and close above the following day, then I would be a lot more constructive on this. Otherwise, 619.08 should be the lows, and we'll have to see if the trend can continue to the upside. From an average weekly range perspective, yeah, that takes us all the way up to 642, and I have it. I have a little bit lower, 602 to the downside. But this is an interesting chart right now. So if I took all these kind of lines off, all those indicators, if you will, and turn these lines back on, I mean, what this is telling me is that the Qs are really trying to break out of this longer term consolidation. So is this a catch-up trade? That's the question, right? So we have this gap is filled. So we have all gaps filled over here. If we get continuation moving forward on the week, honestly, this is a very prominent breakout setup. Do we actually get there? Who knows? That would take us to 660, 675s almost. And then intra-week, we're looking at 630s. We're looking at all-time highs on the Qs. Not too shabby. Otherwise, we're testing it. With that first little like fake out, false breakout, let me just, if I tag this right here. Very short-lived. Pulls back. That's actually pretty decent. I could have done with a bigger pullback, but look, we're starting to trend over this downtrend right here, or what was that trending resistance. 1, 2, 3 shots so far. This 630 level is a big deal. I mean, look how many times it tested here. So we'll see if the Qs can actually hold over this. This is resistance right now. So heading up into resistance. It's the third shot. Quite frankly, the third shot's usually a bigger fail. And then if the Qs fails here, any attempt to get back there should break through. Any attempt to get back there should break through. And I think it was 613 that I had. Pretty sure that's going to be a decent little entry here. That's a session gap. Down here, 613 and a quarter. Or a third. Which is a retest. I like it if we get a pullback down here. Otherwise, stay the course because this looks decent. Sold out of SMR today. Jason, this question might not be the best, but I'm very curious because I was talking to someone yesterday. Do you trade and chart with log off? Off. He's talking about log scale. It's on regular. Turn that logarithmic shenanigans off. Because I use a lot of measurements. And if I do measured moves and things like that, it's all twacked out of whatever. So I need regular. I do not use log scale. Anyways, that's where we are. So if IWM is going to be good, by the way, if we're doing the January effect, IDubs, all-time highs. This is looking better. I think this heads to 270s. This IWM chart does not need the rest of the indices to do it. We call IWM like the red-headed stepchild of the market because it doesn't conform to whatever. It's the black sheep of the family. It does its own thing. And so even if the Qs or SPY takes a downside move, IWM doesn't have to. Ideally, we would like all of them to be trending in the same direction, but IWM can do, the small caps can do whatever it wants to do regardless. Second most bullish sector. So Qs is looking like a possible catch-up trade, which means that it's not in an active breakout like IWM or Diamonds or DIA, the Dow Jones Industrials is. These two charts look better. Again, same rules apply though. We need to get over last Friday's high across the board. So all of these are still testing. That's the question. Is Friday going to lock in the highs or did Friday lock in the lows? And that I think is kind of TBD. Other than that, look at this gold chart. All-time highs on gold. This is just next level. And I mean, this is a multi-decade breakout, by the way, but here's your consolidation. This makes sense, right? Like from a chart perspective, I'm looking at this. I'm like, okay, where does this take us? Well, it takes me to like right here and possibly into that 450 area. If I just double this, That's about 450s. Now see this. See what happened? This chart is on log scale and it messed me up. So I go back to regular. What is going on? Is this on log scale? Oh, my computer just froze. I can't change it to log scale. Anyways, it would be about 450s if this continues over 430 and change. So, I mean, gap up today, still going. This is a squeeze on a 4-hour. Let me just look at a weekly really quick. Yeah, we're just continuing this little squeeze. Look at this chart, man. This chart is just something else. Like, this is the decades-long breakout that I'm talking about. This is from 2011 to 2023, 10-year consolidation. I mean, I was watching this for like the last few years, and finally it's going. Now it's taken on a life of its own. I just don't even know what to say here, but it's still continuing higher. It's a little divergence here, but if this goes higher, that divergence is going to go away. That divergence kind of just shows me a little bit of salt. I'm curious about silver. Oh, God. Dude, look at this silver. Yeah. I mean, that's intense. It's almost the same situation as gold where you have this consolidation. It's not as clean. Good night. Yeah, I'm not selling this, man. I'm sorry. $80. So it gets to $80. You know, that's $120 on silver. If I measure, I'm guessing. Let me just see this. I mean, like, if I just took this and said, okay, can I? And that's 86. It's 86. $86 with a triple into 120. All right. I mean, I'll take that. Listen, if I see $125 on silver, there it is in the chart. That's how we get there. I will probably sell some. I will not short it, but I will probably sell some. Let's look at the dollar just to see if the dollar's even week also. That's even more constructive for I mean, the dollar has got a ton of traffic ahead of it. If the dollar takes a downside move here, these metals are just going to go parabolic if the dollar continues to be weak. And if we get a rate cut, well, then the dollar will continue to be weak because that's what will happen. That's insane. Copper is going bonkers. Oh, this is my boy. Do I need to look at my chart? I know this was doing good. Freeport. Oh, yeah. No, we're happy. By the way, here's a monthly chart of Freeport. For an annual pick, I'm very, very close to making this like an annual pick because this breakout, by the way, has not even started from here across. Like, this is our, like we're here. It's a monthly chart, all-time highs. By the way, also, this was $3.50 in COVID. I bought that. I did not hold on to it. But, God. I mean, look, it's off my chart. No. No way. Was that real? Did that say 1,000? See, what the hell's going on? Is this log? Okay. That's what happens when you use log. For whatever reason, my things are flipping around. It's what happens when you use the log scale chart. That was wrong. I was like, okay, 120 makes more sense. 1,000 was like, no way, that's not going to happen. So yeah, we don't use log scale charts. And now you know why. There it is, perfect example. Yeah. So so 120s I like. That makes a lot more sense. I think that's very reasonable for this kind of breakout. And yeah, that's a double, more than a double from here. But I'm really loving this chart the more and more that it goes. And Freeport specifically is not just copper. It's got the rest. It's got silver and everything too. So of the miners, I think this is the one to go. God, I can't look at the silver chart anymore. Okay, so now I'm back to a regular chart for sure. Let me just make sure that these are, that these stay on regular. Cool. Home Depot, let me just, you know what, let me go through your requests. See, something happened on when I was saving these templates. That's what it was. Okay. So I can use this one. I'm going to scroll up to the top. Can we do SoFi? We can do SoFi. You guys are going, oh, there's a lot of comments here. Rocket Lab to 200 now. We have Rocket Lab to 100. You guys seen China? I'm really, I want to look at Chinese names too. All right, Midwest with Nvidia requests. So this one, it's not the IWM effect. It's definitely not that. Oh, look, he just gave this to me. He just gave me access. Nice. He must be watching. Thank you, Rye. But I mean, Nvidia here is kind of like, you've broken this general downtrend, and usually when things like this happen, they actually don't immediately break out. Like, you get this first push. Sometimes you get a retracement that's like deep. This one is basically it. Can it come back here? I will actually tell you that it can, but it's going to be data dependent for sure. Nvidia is usually the last one to go for earnings. So I think what's a given here on Nvidia is, as we go through earnings season, it's not, oh, sorry, I saw Thoughtfucker's comment up there. It's not that Nvidia's earnings themselves will need to go. You're going to want to be, I'm going to want to be long when the rest of the Mag 7 report. So when it's the week or 2 weeks where it's like Google, Microsoft, Meta, Amazon, all reporting at once within a very short period of time, quite frankly, the trade during that time is Nvidia. It's not even the other companies, but it's when the hyperscalers all start reporting at once and they start talking about the CapEx. And what you're going to want to hear is that their CapEx is not slowing down, and in fact, it's speeding up. I'm sorry. You're going to want to hear that their CapEx, their spend, is going higher on the GPUs. If you don't hear that, it's going to affect Nvidia. If the story is, well, we're changing to Trinium or TPUs or this, that, or the other, that's going to affect Nvidia. It'll probably affect all the custom silicon companies too. Think Broadcom, think Marvell, think Albemarle, whoever, right? Like, if someone's pivoting to custom chips to kind of pivot away from Nvidia during the earnings season, it's going to affect Nvidia. So because of that, I feel like Nvidia is just very much in a sideways pattern right now. And what I will say is, this is the equilibrium, or like the general, what the market has deemed is fair value, just around $180. That's what the market is telling us that the appropriate price is for Nvidia right here, right now. So it's not really a trading range. If it goes lower, the market is saying, hey, look, at $170 that's a better value for Nvidia. And right now, they just want to hear more. If it goes close to 200, that's probably towards the top of the range. It can get to 210 and then some, but it's a stay the course at the moment. What I will say is that over 190, if like we have full days trading above 190, which we've only had some spikes, 190 spot 87 is current resistance. So what you're going to need to see is you're going to need to see that full day open above and full day open or close above 190. And then we're very close to 200. It's a small little range, what I would say, but that's tradable from this area to that area to about 197. And then if we can do the same above 197, then yeah, forget about all this. We're probably, if Nvidia can get over 197, it's quite frankly more like this in the 240s. And that until then is going to be the story. So the market wants a reason to give Nvidia that kind of growth moving forward. That's going to be 240 to 250, give or take. And I think that it's going to come down to the hyperscalers earnings season. So any chop between now and then, I wouldn't chase, but I'd be more in the buy dip mode between now and then, which is like a couple weeks. That's my take on this. Let's see what else. JPM. Oh, let's take a look at some of these financials since they're coming up. Yeah, JPMorgan coming down decent. A full retest is right here. So this is that prior breakout zone. Generally speaking, 317 was what it just came off of. So even this pullback, that makes sense. Break, retest, and then we'll see where it goes. So my gut says 320 is where it's going to be after earnings. As it move a whole lot, and then it's going to make another move after earnings. But this is as long as it can hold over this 310 area, I think that looks pretty. I think that looks fine. But that would be a little dip buy. Let me see. Moving forward. You guys are busy in the chat, SoFi. So the high beta play. Look, SoFi 24 is the dip buy. I don't. It's not a like down here is it has been. Those buyers kind of moved up slightly to 25s. So this is the low end of what the market's considering fair value right now, and you kind of see that by this graph on the side of my chart. It's literally smack dab in the what we call point of control, value area point of control. So this is right where it's kind of towards the low end. But 26s, which is basically where it was this morning, is support right now. If you lose 26, cool, then we go back to the low 24s. But until then, that's where they're picking it up, right in here. This is that breakout retest move, kind of pushed deep in there, but still holding. That's your 26 support. That's what it looks like. That's what it is. But I think this one needs a little time for sure. And the headline did not help. But this thing, SoFi likes to rip ahead of earnings, which would be just like the 32. You have right here 30, 31 and change. And then my gut is after a little turbulence here, whatever that looks like, it makes its way there before earnings actually hits. And then it's going to be a TBD moment for what Noto says on the actual call. A breakdown would be to 20s. Baidu. So I have a calendar spread on this that's pretty high, by the way. And this is a directional trade. This is it. This is your pullback. 1, 2, 3. This is the fourth attempt. I think these are ready, especially this one. I guess we could look at JD. Baba, I know for sure is in the spot. It's in the good spot. But Baba versus Baidu. Here now, I can tell you for sure, Baidu is in a better setup than Baba. Let's just do just in case. All I'm going to do right now is I'm just going to look for the bear zone. Yeah, so this is 215s, give or take. So if we get over this area, look at, I pull this back. 1, 2, 3. Yeah, this should be it. Look how important this level is, this breakout. It's a weekly chart. I mean, it looks good, guys. It looks, even from that perspective, it's like a break. Look at that. Out, retest like we do, and now we're 215s extended through like the next multi-months. That's a longer term trade. Just curious. Baba, because that was a week. Yeah, okay, so Baba's doing the same thing. 150s was a clean retest. What am I going to say here? These charts are pristine. Talk about acting right. It was right up to 188 last time. That was exactly the target. 188 on Baba is the equivalent of 215 on Baidu. This also, look, this looks good. We're going to 170s, 177 and a half. If Baba can get through 180, we have earnings coming. We go here and then 220s, right in this 225 area. That's the next spot on Baba. Don't forget we have earnings, so we got to get through that. Right now, we have what's called the earnings run-up, which is the market assuming it's going to be all good before anything happens. Plus, there's some other whatever geopolitical stuff, whatever policy. So China trades not on valuations. Don't use Western logic to value Eastern stocks. That's not a good thing. But it's all about like how friendly the communist regime is to these equities at that point in time. It's all that matters. Doesn't matter how profitable or how much they're growing. Honestly, it doesn't matter. JD on the lows. Look, this is the most discounted and the potential biggest catch up. So, yeah, I mean, we could do this now. I don't know how, I mean, I just said it doesn't matter, but yeah, JD's got the most to go for sure. All right, let's look at some of the home builders. This is request QXO. I mean, massive move for sure. This is a milky pick, the milkman, the cruise boy. I mean, again, push up, retest the lows. I don't know what was going on over here. I have no idea. But that's resistance right now. First day through, I would say definitively expect a retest. I mean, if it holds 24, that's super bullish, but it doesn't have to. Like, this can actually come back in all the way down to 20s and still be fine. But if you're not holding 24, expect to see 20s on a name like this. It's definitely a lower cap, but I think look for confirmation in the next week or so, and that should be better. Nebius. Oh, my boy's asking for Iren. I mean, the neoclouds, look, so this is from our internal group. You didn't get quite there, just slightly. 56, you're on track. You're on track, my dude. You're on track for 56s as long as you can hold this. ETH. ETH, again, also holding. I think you're fine. I'm looking for 35s. I think in this space, I'm not really caring about Ethereum, just so you know. I think that you need to look at like your other names, your alts, not memes. I don't mean memes, but I'm talking about like layer 2, layer 3, or other lower layer ones, maybe like Algo. That's a layer 1. I mean, so these guys are all at the absolute lows. I mean, absolute lows, up 40% or whatever from the absolute lows. But if these guys show any life down here, you don't have to trade it. But what I'm saying is monitor them. They're going to bounce first right now in this situation. And if names like this, ADA, AVAX, whatever, get a move like so off the lows, I think that's going to happen before Ethereum, like this. Look, you're talking about the absolute lows. First of all, if you like the alts, this is the time to buy them. And if these get a breakout, that'll probably happen in rapid succession, but you'll know that very quickly. So if Ethereum does the same thing, that's kind of what we're looking for. But you're going to really need to trend over 35. I could see 38s pretty quickly. But for all intents and purposes, here, look. This is a rounding out. We're looking at a base having formed, this has been in play for a long time. It's just about your time horizon, right? Is your time horizon correct? Because this is not a short-term trade. This whole thing is very long-term. So if we can get through 35, cool. We're back to the 4s, and then I expect a little pullback, and then we're up to 5s, and then all of a sudden this starts to look like something like this, which we all know, and then you're retesting those highs. And that I think takes you to 7. But that's years out, guys. It's not tomorrow. It's not tomorrow or this quarter or anything like that. I mean, can it happen? Anything can happen, but that's not my forecast. All right, Oscar. Look, 14 is just under 14 or around 14. That's your buy spot on Oscar. That's where everybody buys it. I think that's where you would want to buy it. Anything else? Look, this is very sentiment and policy driven. I think Trump said that he was going to veto any ACA subsidy, like whatever that goes through. So in the meantime, it's rhetoric. So if policy changes and he changes his tune, look, expect to see 22 like very quickly. If it actually changes, or not, if eventually it's clear to the market that the policy is actually going to change. First of all, here's your range. Before the policy actually changes, the market will reprice this into the 30s. So that's your trade for Oscar, but it needs to be like not even this year, but maybe the year after. It's all about that policy. So until then, as close to 14 as I can is like where I would be a buyer. In the meantime, 1760 is nice, but it's right in that resistance level. And I expect a bit of a pullback. Maybe I see 14s again, unless it's up through 19.5. At that point, then I'm really excited, and I'm really looking for probably a move like this to take it through. So that's what Oscar would look like. That chop is whatever the headlines are going to be in terms of ACA subsidies. But otherwise, it's a good company. Eventually, it'll probably get there. But again, it's your time horizon. Honeywell. I haven't looked at Honeywell in a long time. This looks good. We don't day trade this, but this looks fine. That looks good. Datadog, you got to zoom in. This is support right here. So big old breakout. exactly at a 0.618 or the golden pocket retracement. I was actually looking for a little something beforehand. Maybe I got a little early. You got earnings coming. They just got hit with a downgrade after trying to take a move to the upside first. That downgrade, I think price target was at 140. So I would expect this to probably traverse back towards 140 before earnings. Just based on that. Usually the downgrades, honestly, the downgrades are laughable to me most of the time, but it is what it is. If this loses today's low, it's not looking good and it'll probably come back lower. But here now, this is support on Datadog. This is it. Needs to hold. I'll give it a little bit of time, but look, if it can't get over 128 again, it's in trouble. Otherwise, 123.65 is hard long-term support on Datadog. USE. That looks bullish. This is another one of those small cap energy names, I think. It's right in resistance one more time. So this has to hold 1550. If it loses 1550, it's not ready, but and you can expect like this. That's the, hang on a second. I mean, this looks like it's not going to break out right now, but if it takes a couple more attempts, 25. So on the next red day, I think I'll get more interested on this one. If it does that, it's I think it's a smaller cap. 5 billion. I mean, it's the January effect. So this, there you go, guys. It fits in. You're about to get a squeeze on the daily. Let me see what the weekly looks like. Yeah, you're squeezed on the weekly. Definitely on the monthly. Yeah, that's what it looks like. It looks like 25s. But you don't have to chase it here. Maybe it just goes. Who knows? A hold of 15.5 is going to be bullish. Super bullish. BLDR, another builder. Builder FirstSource. BLDR. Old school name. I mean, that's the resurgence that I'm talking about. That's what I'm talking about, turnaround. BLDR, overall significant SMAs today. Not out of the weeds. Well, let me get all excited. Maybe I own it. Maybe. We're going to get up to 130s. We're going to have earnings, and then it's going to be TBD. But this is not actually broken the downtrend yet. So a lower high can show up as high as 150, just so you know, right? So because we are, our trend here is just lower high, for sure, right? And then here's the last low. This is a lower low. That's the trend. Lower high. So that's the concern. Another lower low, not a lull. So that means that a lower high, just to be fair, can show up as high as here. That's it. If you're getting in the weeds, you could say, hey, look, this is the last lower high. And then you could say this is a higher low, HL. And then you could say this is a higher high, HH, which also still means that if I wanted this to be good, then I can look for a higher low anywhere in this area here. So even if it pops up, like up here, pulls back down, 108s is still fine. It's just like if it gets beyond this area, it's over. It's a wrap. But there's a long ways to get to that. That's 150. It can do this. And then any higher lows in this $100 range ends up being the launch pad, if you will, or at least where it starts to base out. But this is not a small company. Well, $12.5 billion is not big. Some of you guys should do some. So Berkshire, not going to look at. But Baba, we looked at. Nebius. Berkshire, you got transition phase. Nebius is through, and we're holding. So this should get to 108, which is right about very close to where it is. It'll probably hit its head around 108 for a little bit. When it gets to 108, you want to see it hold this 103 area from here, or $100 area. And like, let's say it does that. I'm going to expect 108 to be where it hits its head. And then I would expect it to push through to 117, 118. And if it could get through there, well, this one goes much higher. I think it was 200s, but that's for like the full year kind of thing. 175s up to 200. Like that. That's what that could do. And that's what it's on track to do. But it's this phase right in here that is a big deal. So expect a lot of traffic between here and 120 before it's like it's just a grindy phase. So we'll know within the first couple quarters. HIMS is toast. This is bad. It's a bad looking chart. Run away. It's almost like ARM. Just run away. I don't do path. CoreWeave. No. It's a big move today. I'll let it breathe. It's just right into resistance. Expect that to pull back. And then if it locks a higher low, cool. That base from before is going to be into 75s. But that is one that you could be patient with and play out. But it looks good. It's not like going to run on you. Lyft. Ooh. Lyft is good. Uber is really trying. Uber is really trying. Beamer. Yeah, so if the alts go and ETH does its thing, I think this is 55s, quite frankly. So like 55s come from here, over here, where that prior congestion level is. If we have that full-blown alt breakout, you'll know over 33. Then you get straight to 38. And then you could expect a little chop like this. But 55s, if it gets through all that. So, but this area right here, that's the chop zone. I think it's going to try to get through. It's at this 38 point right in here. But you're at support. You hit support. You bounce off support. As long as it's holding, I assume it holds, which is here at the low. So like 20 below 27, rip cord. Oops. Microsoft looks bad, by the way. MSTR basing. Microsoft, I say bad. It's at risk. So Microsoft here is about to pull, okay, it's hanging on by a thread. It's at risk. I want to stay away from this for right now, but Microsoft, from a trading perspective, non-investing perspective, looks like it might provide a better dip buy. That last dip on Microsoft was fine, but here's what I'm looking at. If you connect these, and then I get a measured move from this swing low to that swing high, I'm getting a little confluence here. And I'm looking at this area here as the prior consolidation or fair value. if Microsoft is trading below 465, this is going to have a bullish to bearish trend near term. All that means from a pullback perspective, I would not sell this if I owned it, is that I might get a dip around 420s right in here. It's not a reason to sell Microsoft stock, but the first move is to here, and then I might get something like this, at which point I would look to be ultra long. But that's what I have for Microsoft right now. It's very much at risk of losing its near-term trend. It's not a long-term trend, signified by the lost the 50-day, lost the 20-day. The 50-day and the 20-day are both going down in terms of like what angle is this? It's a negative degree, right? The 200 is still up, but it's going to flatten out. And if it gets any lower, the thing is, like, if this gets any lower, it could pop. But if it gets any lower, the distance between all these simple moving averages is then going to start to widen, right? Because you'll have, what will you have? You'll have, let me just do it this way. You'll have like your blue SMA coming down this way. I don't have white, so I'll just make it yellow. You'll have your 20-day, and then your 200-day will be going that way and slowly trending down, and you'll have the distance, make that in pink, between all these widening. So it's at risk. Is it breaking down? It's not breaking down. But I don't want to do anything here. And you're going to have earnings coming. Maybe it happens on earnings, but this 420 level as a technician makes a whole hell of a lot of sense. It's a pullback. It's a retest of this broken downtrend. It's my golden pocket here. I've got a lot of confluence from, let's say, this congestion level right there. Boom. This is a point of control from 2024 to 2025 value area, 415. I mean, yeah, I think 425 to 420, I will start buying this if I see it. But it's not a reason to sell. I think that's what this looks like right now, though. You guys in bull. Someone's in Rubrik. I haven't looked at Rubrik in a while. I like the company. I just don't know if I like the stock. The valuation might be pretty high. You have to look at fundamentals. This company is $15 billion is not bad. It's enterprise data security, backup, and instant recovery. So this will protect you against like all ransomware and things like that. So it bridges the gap between security and actually a little bit of AI and data protection. But think of storage names. Rubrik is an amazing product, super easy to sell in the enterprise, but lower high, lower low. Right now, I think a higher low can show up. I mean, this is where a higher broken. You know what? It's such a choppy chart. It's not bad. You're just like in the middle of this trend. 15 billion seems pretty low though for what this is. Is it a software / hardware name? Let me just look at another. Pure is 23 billion. I don't know. My gut is telling me that Rubrik should be worth a lot more than 14.5 billion. I'm kind of liking this. And they've grown. So the question is, have they grown into their enterprise value? This is like the Palo Alto networks of data security, of data protection, they call it. Not security, data protection. It's the Palo Alto networks of data protection. I'll just say that. The question is, What was that, ticker? The question is, is it expensive? CG, Carlyle Group. Oh, that's a firm. I mean, that was an accident ticker type. Carlyle Group looks pretty good. That's like a what do you call it? Like a Blackstone. I was looking for VG, which I don't think I like, but that might trade is over on VG. 20% from the lows, I'm happy. But here, yeah, you're sideways. It's got to get over 750. Fine. If you like it, hold it. No reason to do anything here. Hang. It's not bad, actually. Zeta. Zeta's on the trek. I don't know if I should use that or this. 25s is in play. 2240 right here, that prior high, should be support. You just don't want to lose that. You can do this. That's fine. Apple with the push this morning. Was it Dan Ives coming out with if Apple doesn't, if Tim Cook stays, and there's all kinds of things, like there's not a lot of good stuff priced in Apple, that's for sure. The difference between like an Apple and a Netflix and a Microsoft, see this red line here on my screen? That's the 200-day simple moving average. Look where Microsoft's is. Difference. Look where Netflix's was. Big difference. So Microsoft here is like Netflix right there, super at risk. And like if you get a pullback, I mean the Netflix one does not. The Netflix one looks like 70s, which makes all the sense in the world. That's not what I see in Apple's chart. I see it below these, and I see a possible pullback to 240, honestly. But that's even more viable than a Microsoft. Like, I mean, that's a buy. But dumb. The 230s, 240s. It's super similar. Like if everything breaks down, which we're retesting the prior all-time high right now from the low end, from below. So having broken below, it's kind of just like springboarding into that, like the little trampoline. So support is not like a hard line in the sand, right? So it's the trampoline effect. It breached the all-time high. Now we're coming back and we're retesting it for the second time from below. This 257 is comes from here. That's really your support over here. It's that 257 area that if that breaks down, 256, if that breaks down, cool, then we're going to see 230, 240. We're going to see that. Which will be a 200-day simple retest. And I think you start accumulating again, which might not be till September if we get it, but who knows? Until then, if we get through, then I could see this retesting that 270 support, which is where this broke down from before. So that's what's important right now is, does this near-term medium level of support hold? This is not strong support. It's a medium support, low tier support, like strong supports down here in the 230, 240s. Look at that. That's big time support. This is short-term support. And even if it does break down, I'm not worried about Apple from that perspective, because like if I said this on a weekly chart, look, longer term, even if it does do this, what's this? I mean, I'm happy. So I think that's what we can see or expect. Do I expect Apple to explode right here? I don't know. I got to see the indices trend and everything else actually start to go. What are you guys talking about? SMR. SMR, it just hit the 50-day. The nukes, and any is my nuke. I do not like Cleo. I don't know what to say. but it makes sense here. It does not make sense there. And these look like sideways for a bit. Oklo is so speculative, man. AMD. Bouncy, third low. Yeah, consolidation still. We still want to see structure show up, which we have not. So we got one little blip, pulling back, holding that general support around 196s, 197s. I can still easily see 87 on this. Even if this goes higher now, I could see this getting up to like 220 and then pulling all the way back to 87 and then seeing if it wants to hold. So it's tradable, but it's not, I don't know about investing. I would say I would chill. SanDisk, I saw a bunch of those. Dude, these memory names are just going nasty. 390 was target. Your target acquired. So you got to get over 391 and then cool, we can talk about 445, but does it happen now? I don't know. WDC is probably one. I like this better, Western Dig right now. I was looking at these like they're not expensive. $67 billion market cap on this is actually a really big company. STX is Seagate. I mean, these are much cleaner breakouts that you're not chasing nearly as much as SanDisk or let's say Micron. Micron's there. I mean, the super cycle continues, but WDC or STX over SanDisk here now would be my choice. But quite frankly, none of them look bad. SanDisk is a little bit different. It's more memory, but they're all memory. I mean, even storage is just nothing but memory. So, yeah, this looks good. It's a little chasey here. 338. Oh, no, you got a lot of gaps down there. If I had it at 230, I'd be happy, chilling. Someone said, go sell my silver. I'm not selling my silver. No. You saw the SCCO is the other Southern Copper. Dude, my boy in the chat. Fucker. I forgot about this one. It's the other copper miner. What a crazy looking chart. What do you want to say? What are you going to say here? You don't like this? Too much? We're asking about SanDisk. Good night. SCCO, Southern Copper Corp, is another copper miner. Yeah, man. These are getting wild at 170. I'm pretty sure this was, I remember this $20, man. One day our ET is going to do the same. Actually, ET looks really good down here. I'll just close. There's a REIT that I'm still watching. I actually haven't bought this yet, but I think I just need to go in. Maybe after they report earnings, I think on the 2nd. If we do get that home builder turnaround, I might add this to the group. AGNC is a REIT. It's specific to like mortgages and stuff like that. So interesting. CopX, yeah. That's the group of miners. This thing is just, crazy. Costco. I haven't gone to Costco in a while. I get all my groceries like delivered. It's coming up to 200. Interesting. Nebius high day. I like Nebius. Remember 108 on Nebius. FCX, I'm not even thinking about closing that. Oh, look at this Nebius. Money. Yeah, AGI is a gold miner, like a smaller cap gold miner, 17 billion. This one I think is probably one of your better best of breeds. Nobody asked me about Kratos today. I don't know why. Another all-time high day. This is just going. It will be. I think Kratos is like way up there on the supplier list too for the government. We're going to be the next, another prime. So that's got a lot to look forward to. EBRJ, Embraer. Is it? Dude, what's the ticker for Embraer? A, B, EMBJ. They changed it. I mean, another godlike chart. I mean, this is an airline, small airline. I knew it. It was going. How's my Boeing doing? I'm just checking on the travel. Boeing's looking beautiful. Oh, they had good headlines. Yes. Oh man. Okay. So maybe Boeing and Embraer go on the 2026 list. I know Ulta was on my 2026 list. That's the annual breakout. TTWO. How's it doing? Is it dying? Yeah. Well, it's probably down. The Take-Two was like push out on the GTA release yet again, but it's probably just noise, quite frankly. It'll probably still come out. They'll work through it. I'm sure they'll work through it. I would not really worry about it. It wasn't, you didn't ask me for Take-Two. You asked Twilio. Sorry, my bad. No. Twilio, wait. I think you see another retest of this 120s. 125. Backed, man. Is that Emp in the chat? Yeah, me and Emp have Embraer. The thing's been amazing. Airbus had strong numbers. Yeah. How high can Carvana go? I haven't even. All right. Well, we blasted through a ton of tickers here, guys. And I think Amit said we're gonna do technical Tuesday. It can go as high as 250s or 550s. I have my first covered call. Rocket Lab, Jan 29 or Jan 23rd. What should I do? Well, Priya, I think it's Priya. Priya, you sold a $90 call and you collected $1.22. So then you made an agreement to sell Rocket Lab at $91.22. So if that's not what you'd like to sell it for, you need to get out. You need to get out because I think it's going to 110. So maybe you could roll it to something much further out, further dated, unless you want to sell it at $91.22 and book the gain, because you would win in that instance. But this looks like it wants more coming into earnings. This has got the Momo on its side, man. I mean, 110. And then I think if it's March, I don't know exactly when Rocket Lab, but you're close. You're too close for comfort. You might get called away. This next week, you're real close. But it's going for $400 now. So you'd have to buy that back, and you'd want to sell something. Yeah, look, you could buy that back and sell March 120 calls, and you would collect it. You would collect $100. That's what I would do. I would buy that back and I would sell March 120 calls, and I would take in a credit of $100 per share or $1 per share. That's a roll. That's a good roll. Up and out, collect money to do it. I'd be happy with that. Not financial advice, but that's what I would do. And yeah, it would be a now because you're at risk. You're at risk, like real fast. You don't want that to go. You don't want covered calls to touch your strike. Like you don't want your strike to touch the price at a covered call. At that point, you're like, whoo, I'm in trouble. But you guys, now they want more. Give me more. I don't know. But the general rule of thumb is, look, you can roll them. Whenever you do a roll, you want to go, you want to go further dated, whether it's up or down, it doesn't matter, but you want to collect money to do so if you can. And you want to give yourself a little breathing room. Otherwise, listen, you're selling covered calls. That means you're making an agreement to sell a stock. You got to think about it in terms of how much am I collecting in premium and what's the strike price? So a strike price plus the premium that I collected. If that number is not a number that you're legitimately happy selling for, there's a different issue, because that's the deal that you're making. You're not making a deal to collect premium every week. That's not how this works. That's not real life. Like, that's very hard to do. You'd have to go, it's not passive is what I mean to say. Otherwise, you got to be like, well, I'm willing to sell it and I want to sell it. And when I get called away, guess what? You win. And that's how you should see it. But other than that, all good. I missed hoodie, but it's a good day on hoodie so far. Hoodie's at risk. It's a good day. It's TBD. I would say not buying. I sold those $100 2027 calls against it. That for hoodie, that like creates an exit around 150 for me, 155. Manufactures an exit price, which again, how you think about cover calls, like I just said, would I be comfortable selling Robinhood at $155 if it's trading below 100? Yeah, I would. And that's the key, if it's trading below 100. Otherwise, it also protects $50 of downside for me. Is Robinhood going to drop down $50? Probably not. Could it drop to 85? It's possible, but we have earnings coming, and there's a lot of stuff that's TBD. It's TBD. Look at that. If Robinhood's earnings is after February 10th, that's post Super Bowl. No, I have it Feb 18th. Yeah, between now and February 18th, I want to buy this somewhere, but I'm very aware that the market could punish Robinhood to like 85 in the meantime. It's been an awesome run. It's not over, I don't think so, but we're clearly in a consolidation phase, and it's stuck. So whatever direction the market wants to go is wherever hoodie will go, but it's not ready to break out. It's also holding its ground somehow, which I'm grateful for, but also prepared if it doesn't. But anyways, I love you guys, and I will see you on the next one. Actually, I'll see you tomorrow. If you stop by Amit's stream, I should be there. But all right, adios, later.